Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 27th of March, 2008, and the market's closed. And we're seeing a little bit of resistance near that declining 50-day moving average, which shouldn't really come as a surprise, as, again, it's the direction of the 50-day moving average that's more important than where the market closes in relation to it. The news reporter I was talking about who mentioned the other day that it was significant is the same news reporter, and this is true, that back in 2000 said that it's a great thing that Cisco right over here was closing above its 50-day moving average. Bottom line is it's the direction of the 50-day moving average, and bottoms are a process, they are not an event. And we might be seeing part of that process take place. As I mentioned yesterday, the volume that's been diminished, basically I interpret it as meaning that the sellers were just kind of waiting a little bit. They're trying to see how far would the buyers be willing to chase prices higher. So they kind of stood to the sidelines. And then once it became clear that that 50-day moving average, that the buyers were running out of their will to purchase further, then today the sellers came back in with a little bit more volume in here. And it doesn't mean that the market is going to make new lows. In fact, I think the point that it took them longer to show up this time shows that maybe they're a little bit less interested in selling as aggressively as they have in the past. I think that as far as the downside goes, again, it looks like we're maybe starting to neutralize in this market. It could get down to another dollar or so down towards that 131.5. But for now, we'll see if these 10 and 20-day moving averages, can potentially hold this market up. When we look at the 30-minute time frame, again, the first sign of weakness came right here a couple days ago when I pointed out that first lower high. Then we saw that gap lower and a lower low. Yesterday we saw the market come up to that 134.5 level. It's 134.61 was that high yesterday, if I remember correctly. And this was the area where we were expecting to find resistance. Now, again, as I saw, I think it was Monday or Tuesday, one of the readers, was a little frustrated because he had sold short at 135, expecting there to be resistance. Resistance is only potential resistance until the market distributes and then turns lower. Clearly, the better short sales have been here over the last couple days when this pattern of lower lows and lower highs has been established. And I just want to do this for one viewer out there who emails me and was upset once when I made this little smiley face. Bottom line is I'm not happy the market goes down, but I'm happy when I'm positioned properly. And clearly right now in the short term, the path of least resistance is lower lows and lower highs. And it comes within the context of a much bigger downtrend. And on the daily time frame, perhaps a market that's starting to neutralize. But while we have that 50-day moving average declining, it means that this market is something that we want to look at as guilty till proven innocent. Perhaps the market is healing. It's turning a little bit more neutral in here. The average price since the January lows looks like has been violated once again. So as I said, I expect that to be a hard-fought area. And what that means now is there's just a lot of frustration in this market. I don't see that really as a line in the sand necessarily, but more of just a gauge of the potential psychology of the participants from this bigger bottoming process that's occurring in here. So if we look at the 30-minute time frame, you can see that we've broken through this. Let me just get back to a regular trend line. We've broken back through this gap area, and we're making lower highs and lower lows. Before I would repeat what I said yesterday, was before I would have any confidence in being a more aggressive buyer of this market, I would need to see it get back above 134.60 to 135 and hold. As far as potential, let's look at Fibonacci goes. If we take a look at the lows from this move, we haven't quite retraced a third of it yet. And again, we've got this bigger area of consolidation in here. So I think maybe 131.5 is an area where this market may head down to. But let price guide your actions. If you're trading these shorter term trends, then look at the definition of trend. The definition of a downtrend is lower highs and lower lows. As long as it keeps making these lower highs, if you're short, your stop should now be up here at this point. It will bounce again most likely. Will it find resistance near that 5-day moving average? Will that 5-day moving average flatten out and turn lower once again? That's what it looks like is the most likely scenario in here, as this failed breakout here will lead to another round of frustrated sellers most likely, from failed moves come fast moves as people start to realize that they better lock in their profits from this most recent rally quickly. Otherwise, they're going to disappear once again, and that's part of the bottoming process. The financial stocks, again, on the daily time frame, we have this very pronounced downtrend. We've got these moving averages crossing. We've seen resistance here again at the 50-day moving average. And, the more times that's tested, the more likely it is to fail to hold. But a breaking of a trend line doesn't mean the market is going to reverse. If the market gets back above there for whatever reason and takes out this resistance level, the breaking of a trend line only means that the rate of descent has slowed. It doesn't mean that it's going to turn higher. I'll repeat it also what I said yesterday is if they don't scare you out on the way down, they'll wear you out. There is not a longer-term opportunity in these financials unless you're looking way, way, way out on the horizon. And the people that are looking at that time frame probably shouldn't even be listening to my analysis here because it's so short-term oriented. But here we see that 50-day moving average did act as resistance once again. We found sellers in that area. We found sellers near this trend line as well. We also saw that this failed move above that 2620 level did lead to further selling in here, and that strengthens that area as a level of resistance again. This is an important level from 26 to 2630. This area is a key level for this market, and I wouldn't have any faith in rallies until it can get back above there. Here we see also, let's shrink it down to a 10-minute time frame, a very defined pattern of lower highs and lower lows. We saw this afternoon maybe a higher low here, but that was violated late in the day too. So the downtrend remains intact, and I'll just do this again for my friend. We have, if you're a short seller, that's got to make you happy. Again, it doesn't mean I want this market to cave in. I'm only looking objectively at price action, and price says we're in a downtrend. The path of least resistance is lower in here. We're looking for maybe some support near 25.5. That level doesn't seem to be holding. And again, it wasn't meant to be an area to buy. It's meant to say, let's see if that level area can hold. We've got a flattened out 5-day moving average now also in that same 2620 area. So we've got a lot of work for this market to do before we can have any faith in holding for longer periods of time. These would be potential levels where we might see this market slow down when more selling comes in. Those aren't necessarily price targets. Again, let price action dictate with the definition of trend. Lower highs and lower lows. If you're short here for the last day or two, well then wait for that pattern of lower highs and lower lows to be violated. If it takes out this high here, it makes a higher high. Then your definition of downtrend no longer exists, so there's no reason to be involved logically from the short side. The Russell 2000 was down 55 cents or 0.79%, and this market had been the strongest as it held below this level of resistance at 70.5. Let's just back this up to the 30-minute time frame to get a little better perspective. But 68.5 to 69 is the level that I've been stating is the likely area to provide the most support in here. Right now on the daily time frame, it's right at that 50-day moving average. We've got that's starting to flatten out. We've got the 10 and 20 crossing. It looks too easy, from a it looks too easy to buy basically. From a amateur's standpoint, I think you've got to see further testing down near this 68 level, further shakeout that is, and I wouldn't be surprised to see this 68.5 level hold. Just because I draw more lines in it doesn't mean it's more, it's more solid. It means that if we break back below here, then this whole move has failed as well. And from failed moves, again, come fast moves. And we've broken the uptrend line. You can see that uptrend line is where we started to see this market begin to turn. The buyers tried to take back control in here today, but it closed right near those lows. If you look at the 1-minute time frame, it was pretty much a struggle all day with that VWAP. And the VWAP wasn't really very helpful as far as support or resistance goes. These moving averages did a much better job of really identifying the trend changes. And, from a day trader standpoint, there was good opportunity here in the morning with this real nice pattern of higher highs and higher lows. And there was, opportunity from the short side, lower highs and lower lows. It made a higher high here. Looked like maybe it was going to continue another uptrend. That uptrend was broken, and then lower highs and lower lows into the close. You don't need a lot of fancy, complicated tools to make sense of the market. Most people overcomplicate their analysis of the market. But this 70, so the 68.5, 69 level, if that fails, look for a test most likely of about that 68 level here over the next couple days. The NASDAQ 100, the Qs were down. They're back below. They were down the most. They were down 2.2% today, almost $1. And you can see that that 44.50 level also failed. From that failed move comes often fast moves. And now we're down to testing that 43.5 level as the next area of potential support. It doesn't mean there is support there just because it was resistance. You can't look at that and say it is support. A lot of people say, hey, there's support at 43.50. Let's see how price action gets acts when it gets down to 43.50. Let's see if the selling slows down. Let's see if it can establish a level of support, go sideways for a little bit, then the buyers can reestablish control. To buy blindly at this level, to me, is just as foolish as selling short the S&P 500 at 135 on the first test. Wait for it to distribute and then decline. That's the proper way to look at these levels. They're not levels to take action. Just like a moving average or any technical indicator out there, you have to understand the psychology of what's going on at that area and the level of disappointment. If this breaks down here from here further, then you could expect, I think, a move down, another dollar towards 42.5 or so. The message remains very constant here. The primary trend is lower, and it looks like these markets are searching for some support in here. It's turning more neutral, but a neutral market isn't one to buy.